Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, they're doing it again. We're going to tell you exactly why the job numbers are super phony, and we'll give you some charts to back it up. Let's dive in.
Trade Genius.
All right, Bob, I don't think any of our audience members are going to be very surprised by what we're going to say. We all kind of know that the numbers are just usually cooked, especially in election year. But this actually, we're going to get down to the kind of serious part of this in that showing them why this is going to be probably a downward revision and maybe a sizable one at that.
Yeah, what really annoys me is that the household survey is more a true indication of employment than the NFP number.
Right.
But they do the NFP number because they're able to put plugs in. And what happened here, and I think, I'm going to set fraud aside for a second. I'm going to set this up for the COVID response created an environment where they tricked the algos. And the algos were anticipating a certain amount of employment based on all the new federal ID numbers, corporate federal ID numbers that were being created. And they were being created primarily so companies can take advantage of the money that was being thrown at them. And so while that was happening, the computers were saying, hey, if we have 100,000 new business formation, that means we're going to have 200,000 new employees. And then over time, they match it back against reality of the new hire reports that you have to provide as an employer, and also the federal tax receipts, by person. And so you had this situation where that was been a lie the whole time. And of course, the federal government didn't care because they're like, hey, we're the party in power. We have to make sure our policies look like they're working. Yet the polling data was saying things were not right. And then the household survey is basically the ultimate polling number, Phil. And look at this collapse. And it's going to bring us to the second chart is, okay, what does this really mean metrically? Is they're going to probably dust off another 100,000 jobs, Phil, out of this number. Remember when they did the first one, I think it was 800,000. They said, when this is all said and done, it's going to be 1 million plus. And here is the other 100,000. It could be 200,000 as far as we know. That's their best guess right now. And of course, I think you said it. I don't know if you said it to me on one of our podcasts or we personally, is that they try to manage the acute headline number and they figure the algos don't care about the real number later on. And right. I think this time they're wrong, because what's happening is the market's reacting to all this weakness in employment. And so somebody fine-tuned their algo because they're sniffing for recession, Phil. And I don't think this is good news at all. And it just dovetails into what you and I have been saying ever since the beginning of this year, is that they're going to try to get themselves through this election. And in 2025, all hell's going to break loose.
Yeah, and I think what's going to happen too is that we're, obviously we warned about inflation ticking back up, right? And so the Fed now has been changing their tune a little bit here as far as I think Bostic came out today and said that, hey, or yesterday and said, hey, we may be open to holding on rates in November at the November meeting, which, the market's going like, hey, what? Because we had two more rate cuts priced in. So they're very much kind of looking at the data, and I've kind of, my take on what the Fed was going to do was they were going to be very sensitive to what inflation does. And that's why I didn't think, people were talking about, oh, they're not going to stand for the market going lower. They're not going to print our way out of this until core PCE is back down into that 1% to 2% box. I'm telling you guys, it's just, that's what they're going to wait for. And they're already telling you that they're very defensive about inflation if they're already talking about putting another pause on rates, which is a bit unusual because once they do start the cutting cycle, typically it's dropping and dropping. Now, I will say this though, if the numbers start to deteriorate in terms of the jobs, and really what I'm looking for here, Bob, is the initial claims numbers to start climbing. Now, we did actually get a pretty decent miss today on that, but we need to see a jump up to about 365,000 on initial claims. We're just not there yet. And that's why I give this market runway to run yet. But when we get there, when we get to 365,000 on initial claims, because historically that's pretty much the benchmark for when the market realizes that we're in trouble. It coincides with some of the previous tops that we've had in the bull markets. And then the yield curve going back to 0.6% and then exceeding that. Okay, so if we get those two things, then the Fed, I don't care what the Fed says, they're going to be cutting, because at that point now their job mandate starts to take over. So what they're trying to do is they're trying to make sure inflation doesn't get out of hand. So if they can afford to hold off on a cut because they might be sniffing out a little bit of a inflation rise, I think they're going to do that. And I think the market, the futures market in terms of Fed cuts they're pricing in 2 might be in for another revision. And I'll be honest, I have not seen the Fed funds futures markets be so wrong as they have been in the last year and a half. And I think it's because the Fed is actually, for once, doing something they said they're going to do, and that is just they're watching the data, and they've really been trying to react to the data. So they've been slow to cut, and it sounds like they're even going to be slow to further cuts by potentially holding in November. So we'll have to see how that plays out.
Well, I mean, look, I think they're staring down the barrel of a new administration, right? So if Trump gets in, he's going to try to fix employment by taking it out of China's hide, right? If Kamala gets in, she's going to try to fix unemployment by hiring everybody in the government. And so I'm sure the Fed's looking back at that saying, okay, either way I look at this thing, I may be getting wage inflation coming in here, and it's going to fix my problem. So that's just my kind of thinking and guessing right now. And then when that doesn't work, because, it's going to take Trump 2 years for any of that to really happen, and Kamala, she's going to have to fight the Congress the whole way through, then I think your scenario plays out where 2025, 2026, you're just going to say, the heck with it, and they're just going to fire hose the markets with liquidity. So it's going to be really interesting to see. But look, this is stagflation all over it, Phil, all over it. Stagflation is here.
Yeah, hard to argue that. All right, guys, well, let us know your thoughts on today's podcast. Post them in the comments below. We'd love to read them. As always, check out our stuff over at tradegenius.co. If you want help navigating these markets, we got a wild end to this year in store for us. Election a couple weeks out, lots of volatility. We'll help you navigate it. Thanks for watching. We'll see you guys on the next episode. Take care.
Trade Genius.